The 10-year is a little under 2% as I shoot that. We all know that. The Fed might raise rates quicker. We all know that. Russia's going to invade on Wednesday. How do we know that? Because CBS told us that. Yeah, we're going to see. It's weird that so many people chose Wednesday. Did they send out like an invite, like a wedding invite? Like, hey, are you going to attend the invasion on Wednesday? X for yes, 0 for no. And if you're not attending, what's the likely reason that you're not attending? All right, so there are 2 points to every side, 2 sides to every coin, all right? So we're going to make money. I'm going to tell you how, okay? Now, I like to follow the UVXY, which spikes on volatility. Actually, it spikes on future volatility, and I'm going to show you the chart and tell you how you're going to make money. So stay with me, okay? But here's a surprise. It spikes if there's like a surprise, a pipeline goes down, there's ransomware or something like that. However, interest rate hikes in March and again in May, whether it's 25 or 50 basis points each time, is not going to take down the market, okay? We all thought the CPI was going to run hot. How did we know that? Because I told you, and it was obvious. You're paying more for gas, orange juice, milk. So CPI means inflation, 7.5%, all right? If they raise the interest rate and it goes from 2% the 10-year to 2.5%, let's say, well, we know inflation's 7.5%. So technically, we already knew that. It's factored in. Now, if inflation or they raise the interest rate to like 6, then we'd be like, holy shit, they're raising the interest rate to 6, but they're not. Whether they raise it 4 more times, 5 more times, 6 more times, 25 basis points, 50 basis points, it doesn't matter. What matters is earnings. So there's a lot of companies coming out with earnings this week. Cisco's coming out, NVIDIA's coming out. So that's what I'm looking for. So let's talk about how we're going to make money today, Tuesday. I'm going to bring up one chart that I love, which is the UVXY chart. So let me pull that up and then we can talk about that, or at least I can talk about that. You guys can listen. Tell me if you agree or disagree, okay? UVXY, I just told you, anytime there's a crisis, something unknown, lots of volatility, it will spike. So here you have the past couple of days, Thursday, Friday, hot CPI numbers, hot volume, 164 million, but it spiked 12%, 32%. Now, what happens after every time it spikes? I don't know. Let's go back 3 months, Matt. What happens? Okay, there's a spike here. What happened the next couple of days? It went down. Spiked higher. What happened? Went down. Spiked even higher. Matt, you're killing me. It keeps spiking. It's going to the moon. Nothing goes to the moon. What happens? It goes back down, back down, back down, back down. All right, more information. Sell off in the market. Boom. Spiked. Back down, lower amount. You know, it spikes. Okay, it's a given. It spikes. Now, the important thing is what you do with it when it spikes. So go to the 1 month. Every time it spikes, it takes how many more days? 1, 2, 3, 4 days to go down. So yes, it spiked for 2 days this time. 1, 2. There was a sell-off today, and it still went up. Imagine if there was outflow tomorrow. So imagine there's outflow tomorrow because the market stabilizes. Outflow, same amount of volume. Do you know where the UVXY is going down to? It's going down to $15. So how are we making money? Okay, I'm telling you right now, if the market screen and the UVXY is currently at, let's just give you an updated price. I don't want you guys. All right, here we go. 1693 flat after hours. So 1693. And I'm telling you, it's going down to $15 flat. That's $2 going down. That's over 10%. So yes, even if you're late to the game, if you decide to be a green market day for the NASDAQ and the Dow, then you are going to buy puts in the UVXY. It's going to go down. You're going to be right. Markets are going to be green. UVXY goes down. SPY goes up. Okay. Other than that, let's go to the opposite. Let's just say for some reason it goes up higher tomorrow. Okay. Let's say Russia invades tonight and Russia's like, hey, US, blah. You think Wednesday? How about Monday night or Tuesday morning? Now, I don't see that happening because I think it's extremely sloppy in the field. And I think they're better off to wait till that field dries out. And if they want to invade, they'll save a lot of manpower, time, and there'll be less death. And we all don't, no one likes death. It's just unheard of. All right. So if it spikes, yes, they're going to push it north of 1860. All right. So that's what you need to prepare for. So if you see it at, where is it right now? Again, I don't want to misjudge here. Right. 1693. So 1693, it's going to go to 1850 if it spikes and there's war that breaks out, or the markets are just throwing up on themselves. The 10-year spikes to like, I don't know, 2.05, like a whole 5 basis point higher. Again, I don't think that's going to happen. I don't think the market's going to throw up on itself. I mean, you can see any of my other videos below, even the next one here, and I'll tell you why that's not going to happen. With that said, I'm hoping everybody makes money. That is my goal, to teach you best entry. I'm starting a trading challenge with PB Investing on Friday, February 18th. I'm going to tweet all about it. It's going to be all over Twitter. If you're on my Discord, then you're going to see it anyway, all right? Because you can see all my tweets. But every time I see something, I'm going to shoot a quick video. Here's why I'm entering into. I'm carrying SPY calls and UVXY puts because I think the market sold off a little too quick. Remember, they buy the news, sell the rumor. So the news was Russia's invading on Wednesday. When the truth comes out that they're not invading on Wednesday, and maybe we did a reverse psychology on them, the U.S. dropped some news and Vladimir Putin's like, all right, we're not going to attack for another week. How about that? We'll wait for the Olympics to pass. Good for the market. That happens. Volatility goes down. Matt's right, and we're all winners.